Crypto Hotep here with another investing video. We are back, guys. Week 76 is upon us here. And if you're wondering where last week went, well, if you look at the channel, you could see that me and my wife were actually on vacation. We were celebrating her birthday, a very big milestone for her. And that's why you didn't see an update to the family portfolio. But we are back again this week for week 76, and a couple big things have happened since or from our last video. Last week we did get those interest rate cuts that we mentioned during CPI week here. So Jerome Powell, he did make the announcement that we went from a 4.5% interest rate down to a 4.25% or 4.25% interest rate. So a quarter percentage there. So that was the first thing. Very bullish, right? And then the second thing is we also had some other tariff news, and also we've had a lot of bearish pressure on the market. Okay, we've had bond yields that have gone up, and just a lot of nervousness about the economy. The job market is very soft. It's not a very good job market, and that can play upon the economy as well, as I mentioned in this video also. So with that, coupling the fact of the jobless claims and just the labor market as a whole, it just has some investors worried. So we saw a little downtrend in the markets this week, actually. So before we go into week 76, we always go to week 75, the week prior. And if you're unfamiliar with these videos, one thing, first off, thanks for watching this video. And these weekly updates that I do, basically I shortlisted some stocks for my family to choose from. They gave me their choices, the companies that they most resonated with in a short list. And then we proceed to use M1 Finance as our broker of choice here, and you'll see it shortly. With M1 Finance, you can create a big pie portfolio, and then have sub pies within it. And then every week we document the whole investment journey with my family, start to finish, how we're feeling about the markets, the buys, the sells, the dividend activity, and as I mentioned, the whole investment journey with me and my family. If these videos are helpful, feel free to like, subscribe, comment, share it. It helps out the algorithm, and it'll spread the word to other like-minded investors as well. But none of this is financial advice. So week 75, guys, we saw our balance climb over 3,000 at $3,097.07. A total gain of $273.72 year to date. Dividends earned $22.06. And with a year-to-date market rate of return of 12.14%. Not too shabby. So week 76, what are we looking at? So week 76, our balance is over 3,100 at $3,199.17. That produced a year-to-date market rate of return at 14.39%. Or I'm saying market rate, money-weighted rate of return, I'm sorry. We have a total gain of $328.40 with dividends earned of now $22.84. So what's happened these past 2 weeks here in our account? So we'll scroll down here and we'll go to, I think it right here. This is where we were at. So September 15th was a big dividend day. We got dividends from Google, Realty company, Cintas, and McDonald's. Big dividend from McDonald's here, over $1. And if this is your first time watching these videos, and you may see that these dividends are very small, but honestly, if you go back to week number 1 or maybe week 10 and watch the video, just look at those dividends. Those dividends are smaller than this. And again, with dividend investing, you have to have the stamina for it. So these dividends will come out as pennies because, again, if you go back to week number 1, the balance was only a couple $100 in this balance. So we were literally getting pennies on the dollar. So it feels good to see $1.24 dividend just because we've been stacking so much over time here, right? So what did we buy? We bought some McDonald's. We bought some McDonald's with that $1.24. And that's the good thing about M1 Finance. You can buy those fractional shares. If you have some loose change lying around like we did, you can buy those fractional shares and keep it moving. We also had one other buy of $1.73 for Cintas. So we did buy some Cintas. That was September 18th. So fast forward to this week now, we were blessed to have 2 deposits. And that's another thing. Normally every 2 weeks, we'll only deposit about $15 or so, because the key of these videos is to show that you can build wealth with very small increments of money. You don't have to have a huge amounts of money. You just have to have a decent amount of time for that money to compound. So every 2 weeks we do about $15, and then if we get an extra payment or a bonus, we'll throw a little bit more money in there. So we threw $30 in there, totaling $45, and we did go shopping today. This was a perfect day to go shopping. So we did buy some McDonald's, Costco, Coca-Cola, Starbucks, Pepsi, Target, Domino's Pizza, Amazon, and Google. Okay. And let's go back to our portfolio here. And as we always do, we go bottom to top and we go through each portfolio. So on the bottom currently is our middle. Let's go to our middle stocks. So our middle has a balance of $386.49, money weighted rate of return of 5.19% year to date, dividends earned of $2.62 with a market gain of about $11 and a penny. Okay. So our middle stocks are actually doing really well from the last time we did this video. Our middle has significantly dropped off and was in quote unquote last place with a negative balance. And the reason for that is Target was definitely holding it down, and it still is at a negative 31.26% money weighted rate of return is year to date. However, the Google position at 71%, and now Tesla is finally gaining ground again, over 28%, and then Sony steadily holding strong above the 20s and the 25% at 36% plus money weighted rate of return, is basically keeping our middle stocks portfolio afloat here. And honestly, the Starbucks is gaining some ground. We're kind of narrowing the gap with Starbucks here. It is down 8%, but not really worried about that. But it is encouraging to see Tesla, because as I mentioned before in the weeks prior, when Tesla was down and out and everybody was just naysaying Elon and everybody had turned their back on Tesla, I said, just keep buying. We're gonna close the gap. We were gonna close the gap, and this was a negative. I think we were negative 20, 30%. We were just buying and holding, and that's, as long as you do that, the quality, it has to be quality companies. That's the huge thing, that quality companies that you don't mind throwing money into so you can sleep at night, then you'll be just fine with investing. Okay. All right, next up, let's go to my wife's portfolio. My wife, she dropped off this week, and I'll show you why here. So, but still at a very impressive money weighted rate of return, the best actually. So balance is $425.44. Money weighted rate of return year to date is 45.79%. Boom. Dividends earned of $2.42, market gain of $98.93. So Celsius has dipped. Which makes sense. Celsius has been on a tremendous run-up. And right now it's taking a little breather. So again, my wife is up only, and I say that very sarcastically, 103.60% on Celsius. Google still up 57+%. Pepsi up over 1%, so a little bit down in Pepsi, but still in the green. And then Tesla again. Tesla, we closed the gap and we kept buying. And look at Tesla. Tesla money weighted rate of return up over 40% in Tesla. You love to see it. All right, let's go to our youngest. Our youngest made some ground against mom here with a balance of $448.39. Money weighted rate of return of an impressive 18.61% year to date. Love it. Dividends earned of $1.56, and a market gain of $52.31. So again, similar fashion, guys. Tesla closed the gap up over 26%. Apple is finally in the green. Again, quality company, quality product, quality service, quality stock. You just keep buying. We've been down on Apple a whole bunch, but now we're up year to date, over 15+%. Sony still holding its own, up over 42%, and then Starbucks down 8%, very similar to our middle. But Costco inching up here, up 4% on Costco. Okay. And then let's go to our Otis. Our Otis is finally in the green. Finally in the green. This is very good. Our Otis has balance of $969.08. Money weighted rate of return of a positive 7.91%. I love saying that. Dividends earned of $4.72. Total gain of $61.69. So again, very similar, right? Apple up, Tesla up, Costco it's barely up, but it's up there. And then McDonald's up over 5% with McDonald's. Very good to see this. I love seeing this. It's been with our Otis, it's been a harder road for our Otis because with their stocks, their stocks it was very concentrated in those four companies, and that's it. It was very simplistic. It's been simplistic for the whole time we've been doing this channel. It's just been these 4 stocks. Those are 4 companies it chose, and they want to do that. So, but again, it kind of pays sometimes to diversify, because if all your money's in the 4 stocks, then if 2 of them go down, now you have 2 of them that are carrying it. So it all depends. But again, when they're all pumping, it's good to see. And then last but not least, me and my stocks, $969.77, money weighted rate of return of 13.7%. I'm not mad at that at all. We can let's see what a benchmark looks like for me. And I normally don't do the total stock. I normally do something like VOO. Let's see what I look like here. Okay. All right. So somewhat beating VOO, higher dividend yield. I'll take it, and lower expense ratio. Hey, I'm doing good. I'm doing good here, and fantastic feature here on M1 Finance where you can benchmark your performance with other assets and ETFs. It's a very good feature. So with mine, 13.7% money weighted rate of return, dividends earned of $11.52, pretty good, and then total market gain of $100.28. So kind of the thing that stood out with me this week is finance. Finance has dipped a little bit here. So finance is in the red. I'm down over 5.5% on my finance stocks, which are just Visa and Moody's right here. Visa and Moody's are the ones that are down currently. I really am not too worried about those. We are up over 40% on technology, which is just Google and Microsoft. Real estate, which is Realty, we're up over 7%. Industrials and energy, which should be Cintas and waste management. Even though this says we're down the total year to date, we are up a positive 2.16%. Pharmaceuticals, which is AbbVie, we're up over 27%. And then consumer staples, which is Lowe's and Costco, we are up an impressive 2.22% here. Okay. So again, the big dip here, if you see this big dip or one of these anomalies here in my portfolio, that was around the time I was consolidating everything. So I was consolidating all of my positions, and I trimmed down my stock positions from around 50 down to 12. So, but all in all, pretty good showing with my portfolio here. So for week 76, we have $31.99.17, over 14% year to date, with $22.84 dividends earned. If these videos were helpful, guys, feel free to like, subscribe, comment. Let me know what you think. And as always, thank you and happy investing.